so we can start our session and we can move ahead. First of all, I would like to introduce myself. My name is Sonam, and I'm here working as a program manager here in ISEC. ISEC Learn, who has conducted this session for you. So first of all, let's know about ISEC Learn a bit more so that we can go ahead and start the session. Okay. So for a basic understanding, I have attached one video of ISEC Learn where you can get to know what is exactly ISEC Learn is doing and for whom. Okay. So let's play this video. Okay, so as you all have seen that what is ISEC Lens? So basically it's an e-learning platform which provides all type of courses that is required for your career build, like digital marketing, data science, cyber security. We do have healthcare management programs. We have DCA, PGDCA, all technical courses like AI, ML, data science, Power BI. We do also have foreign languages course like French, German, Japanese. So all these type of courses that can help your career to grow we here in at ISEC Learn providing. So this is all about ISEC Learn. Now let's move. Before moving ahead, I would like to tell you that throughout this session you will be on mute. So don't worry if you guys will have any sort of questions. We will take a Q&A session at the end of this session. So where you can ask any of your doubt. Okay, so keep your questions with you till this test session. Okay, so don't worry. Let's move ahead. So now let's learn about our today's or just let's know about the trainer who is going to take this session on the very beautiful topic or very awarenessful topic that we all have to know about in today's day. So his name is Mr. Charanjit Singh. He is a seasoned professional. He has 26 years of experience and he has done so many degrees. He has like his tenure as head of group fraud risk and investigation at first Abu Dhabi Bank. And he has done so many things and research in this field. He has ample amount of research and knowledge about this topic, and he is going to guide you. He is going to make you understand what is fraud risk management, how you can do this, what needs to be done or not. Okay, so all these things we will cover throughout this session. I would like to call him now, Saranjit sir. Kindly start this session. Our audience is waiting for you.
Thank you. So basically, fraud happens in every field of life, be it personal area, be it professional area. So I'll start with personal area. So say we hear these stories, right? That house help, they do the job and then one day they vanish, and then people come to know that they had given false identity, they had given false credentials, or we hear stories that somebody joined a company by providing fake documents, fake experience certificates, and then they run away after doing a fraud. Likewise, organizations are made up of people. So wherever you have people, you will have fraud. And don't think that it's only people who do fraud. Sometimes they use technology to commit fraud. You would have heard about fake apps coming up. You would have heard about these get rich schemes, get rich quickly schemes. And nowadays in India, we hear a lot of these digital arrest fraud. So frauds, nobody likes fraud. We don't like fraud. But whether we like it or not, frauds occur. Be it a bank, be it an insurance company, be it a retail store, they lose money due to theft. They lose money because somebody creates fake clothes using the big brands. Uh, so fraud is everywhere. It's like, omnipresent. It's present everywhere. When people say we don't have fraud at our organization or I don't have fraud in my life, that only means they have not looked for fraud. Fraud can happen with anyone and it can happen anywhere. Think of a sector, and we can discuss it during Q&A session, what kind of frauds can happen in that sector. Now, coming back to our slides and section for today. So why frauds occur? Because there is access to money. So in case of banking, people take loans, and they can take loan by providing fraudulent documents or by providing misinformation, be it a loan, be it a card. Another reason why frauds occur is people, they can convert money. Think of financial crime, which is money laundering, terrorism financing. They all need access to money, and money is there in mostly in banking sector. They also get access to liability accounts. So liability accounts are those through which people do financial transactions without borrowing from banks. So why would a fraudster need access to account if not for borrowing from the bank? So they need access because they want to use these accounts to route money. And nowadays we see digital transactions happening. So digital transactions, all you need is user credentials, which is user ID, password, either on internet banking or mobile banking, and then you get access to the account. You may not take any money from the bank or take any money out of the account, but you use that account to route money, to hide the trail of money. Because more accounts get involved, it becomes more difficult for law enforcement, say police and other authorities, to trace the real beneficiary of that fraud. And digitization is offering a lot of anonymization. Anonymization means in old days, when you look at any kind of transaction, be it booking a airline ticket, be it doing e-commerce transaction, there was no e-commerce. You would go to a supermarket or your nearby kirana store, or you walk into a bank branch, you want to book ticket, you would go to airline counter. But now you can do everything digitally. So it's easier for fraudsters, and they may be sitting in some foreign country or in some far off area, but they can access the services using apps, using internet. And also frauds occur because in organizations focus is on short-term profits. So nobody wants to, do what is good for the organization in long term. When I say nobody, I mean generally people who indulge in fraud. I'm talking about them, not about employees who are loyal to the organization and they do whatever is good for the organization. But because people are under pressure to meet their monthly targets, their annual targets, even top management, sometimes they are pressed to show to stock market high profits, lower costs. And that's where sometimes if people are not high on ethics, they take shortcuts, they cut corners, and that leads to frauds. High reliance on technology. So when we think about technology or we talk about technology, the image comes to our mind is technology is safe. But for fraudster, they can find loopholes in the technology. So to give you an example, we call it OEM based compromise. So what is OEM? Original equipment manufacturer based compromises. So suppose you are careful that you don't download any malware, any spyware, you do not click on any suspicious link. But what if the mobile or tablet or laptop which you have bought, there is a pre-installed malware on that? How would you know about that? So you have gone for a low cost mobile, low cost maybe a laptop or PC. When I say you, I mean generally people. When we are looking to buy something, we look at rating, we also look at price. And fraudsters, they may be selling their stuff high quality at low prices, but only catch is they come loaded with malware or spyware. So if those things are preloaded on the devices which we are going to use, how do you safeguard yourself or your organization against this? Regulations globally are inconsistent against fraud. So, in one country, indulging in fraud means life in prison. In another country, it may be 2 year, 1 year, or they don't punish attempts to commit fraud. They only punish when the fraud is successful. That means there is no deterrent for people. They keep on trying to commit fraud. When they are successful, they get benefits of fraud, and if they are not successful, there is no price to be paid by them. And because all industries are highly competitive, everybody wants to make things easier. They want to reduce controls so that anybody can access anything in a seamless manner without any friction, and that fraudsters exploit. Then when organization try to look for fraud, it's like looking for a haystack, looking for a needle in a haystack. So there is huge volume of digital transactions or other form of transactions, and fraud is a very small percentage of those transactions. Best case scenario, it would be 10%, but worst case scenario, it is 0.001%. So how do you identify that 0.001% when you are dealing with millions and billions of transactions? That is one of the reason it's difficult to prevent and detect frauds. Okay, so what is the fraud statistics? Uh, if I look at numbers around fraud, there is no consistency. So all this data I've compiled by doing research online. So some places it says X amount of fraud is happening in banking sector. In other places, it talks about Y amount of fraud. So if we look at between Jan to April 2024, almost 7,000 plus daily complaints are lost, and INR 17,500 crore was lost. This is a big amount. But if you look at the second bullet point, Minister of State for Finance, he has made a comment that 69.68 crore in financial year 23 was lost, which has become 177 crore in financial year 24. But you look at third bullet point, it is quoting another source which says that in 2023 alone, 7,488 crore was lost due to fraud. Now, when you compare 177 crore and 7,488 crore, there is big difference in these two numbers. So, what is correct? We don't know what is the true value of fraud because not many organizations want to report fraud. Not many people want to report fraud for various reasons. One, they think that if we report fraud, others will see that a lot of fraud is happening in our organization. Likewise, some people, because of shame or other reasons, they don't want to report that they have been defrauded. As per RBI, Indian banks alone, they lost around 139 billion INR in FY 23-24. So one thing is clear that while numbers may be inconsistent, but cost of fraud is very high. So numbers involved in fraud are high. There was another statistics which I have not mentioned here. It is latest. It says that by next year, 2025, end of 2025, we will have around 10 trillion USD loss due to fraud globally. It is almost 10% of global economy. So size of global GDP is some 100 trillion, expected to be USD 100 trillion by end of next year. And they are calculating that almost 10% of that would be lost due to cyber crimes. Now, what are the consequences of fraud? So, there are consequences of fraud for victims as well as for organizations. So, when we talk about victims, and I am talking about non-financial consequences. The other day, there was a news item that a mother got a phone call. Somebody was trying to scare her to get money, saying your daughter has been arrested because she was involved in some sexual trafficking related stuff. The got the attack because her daughter was supposedly studying somewhere, and when she heard this fake call, somebody posing as a police officer, she got heart attack. She died. So just by hearing that her daughter was supposedly involved in some scam, she got the heart attack. Now you cannot calculate this loss of life into financial numbers. uh, there are people who had to suffer consequences of divorce because wife wanted to surprise husband by earning money on the side by doing some work from home job, and she was promised she'll get whatever she is investing, she'll get three times of that within a few months. But to her surprise, she lost that money. So instead of pleasing her husband, who had already lost the job, that she got handsome money, it led to divorce between husband and wife. There are people who lose jobs. So other day there was a news item that CFO of a company which had offices in multiple countries, he was taken on a Teams call like this, what we are doing, Google call. And there they use deep fake videos of 19 other people to convince this CFO to do a high value fund transfer. The CFO did that believing there are 19 other people on the call, and suddenly this request is coming in to do fund transfer. He did that. But later on, it was found that this was a deep fake call. Deep fake is wherein they generate fake videos of real people, and you would believe that these are real people on call, but these were fakes generated using technology. So after this transaction, when the company came to know about fraud, the CFO lost his job. Dreams of higher studies, building own house, or even medical treatment, they get shattered due to fraud because people, they had done some savings for these different purposes, but when fraud occurs, they lose their savings. So why I am talking about these consequences is when we think of fraud, we just think that people are greedy. But if you look at cases like digital arrays, there is no greed involved. It is fear. Or sometimes people don't realize that they are being scammed. They think it's a genuine transaction which they are doing. So they are not under greed, they are not under fear. They believe that they are doing a genuine transaction, like buying a pizza or ordering from some app. But they don't understand that fraudsters are capturing their information, which is then used to commit fraud. And for organizations, the consequences of fraud is, other than reimbursing the victim if it comes to that, time and effort of anti-fraud team, management, legal and compliance departments. Because if cases go to court, everybody gets involved. You have to engage lawyers, not just reimburse the victim, but also pay the legal fees. Uh, some organizations wrongly think by taking insurance, they are covered against fraud and cybercrime. But insurance is also a business. Insurance is not there just to pay off the organization. If organization lodges claim, the next year insurance premium would go up, or insurance would add certain exclusion criteria in the policy. Also, when people face frauds on digital transactions, they believe that digital is not good. And you would hear a lot of people saying old times were good because there were no digital frauds. So, on one hand, organizations are trying to bring people to digital channels because it is low cost channel, it is highly efficient, and supposedly low frauds happen there. But on other hand, when people lose money due to fraud in digital transactions, they move away from digital transactions. So it affects the business model of organizations. Now tomorrow, suppose e-commerce gets a bad name, nobody would want to get into e-commerce transactions. So what would happen to likes of these e-commerce platform, or all those who are using apps to generate business, be it transportation, be it retail. Another thing is, in India specifically, the reputation gets affected for organization. So there is no restriction whether true or false on media to publish name of the organization. So if people see name of organization that this has been hit with fraud, it loses its reputation. So what are the different type of payment fraud? So this session is primarily focusing on banking, but in Q&A we can talk about other sectors as well. So there are two type of payment fraud. One is customer initiated payments, and second is account takeover or ID theft, wherein somebody is impersonating as customer and then doing fraud. So what are the customer initiated payment? Digital arrest is the latest type of fraud wherein customer is digitally arrested falsely and they themselves send payment to fraudster. So if somebody tries to confirm who has done the transaction, customer would confirm that they have done the transaction. Later on, they obviously realize that this was a scam payment. But while they are processing the payment, it's very difficult for a bank or a payment service provider to identify such fraudulent payments. Then there are fake apps and websites. So fake apps is I have seen apps of large eating joints. I don't want to take names on this training session, but multinational food chains who deliver food, pizza, burgers, and likewise, their look-alike uh, apps are created and people think they are getting a very good offer. Buy one pizza, get three pizza free, or buy one burger, get three burgers free. But unknown to them, it's a fake app who are taking their payment and then never delivering whatever they were supposed to deliver. Another kind of scam is advance fee scam, wherein people are told that you have won a lottery or you have won a prize, but you just need to make some payment for processing charges. Other one is a get rich quickly kind of investment scams. In India, we have heard of so many of these scams that you buy a car, rent it out to us, and then you will get your investment back in 6 months. Plus, you will get a high return, or you refer people to us. More people you refer, more percentage of returns you will get. Basically, it's a Ponzi scheme or pyramid scheme, wherein they use existing victims to onboard new victims. And other kind of customer initiated payments include deep fakes. I gave you example of that 19 deep fake personas generated. Nowadays, you get these automated calls on your mobile that we are calling from XYZ courier company or we are calling from telecom department. Press 9, press 1. And then ultimately they try to gather information from you, which is later used to commit fraud with you. So these are different type of customer initiated payments. Then you have account takeover or identity theft kind of frauds. So here, why we are calling account takeover or identity theft? They impersonate as victim and they get access to their banking channels or their credentials to airlines to use the reward points, their credentials to e-commerce website. If a card is linked to place orders on that, they use social engineering to do the OTP compromises. OTP stands for one-time password. They can pose as banking staff, some other government officials to get the customer to compromise OTP. Or sometimes they install malware or spyware. The latest one I have seen nowadays is because it's wedding season, they are sending digital wedding cards. And when people download that digital wedding card or they open that digital wedding card, malware gets installed. So malware mirrors whatever customer is seeing, and fraudster can also see the same information. There are credential compromise because people are not careful. They keep same password for multiple websites, and if password for one website are compromised, fraudsters get access to credentials to multiple other websites for that same customer. Or fraudsters, they fraudulently update customers' email ID, mobile number with the organization, and then they do the password reset and get access to customers' account there. Another category is man in the middle or man in the browser kind of attacks, wherein they have installed malware on the customer's browser on customer's device, and whatever customer is doing, fraudsters can also see that, and many a times they can change the information. So, say customer is inputting transaction for 5,000 rupees, fraudster can make it 5 lakhs. and customer get OTP thinking it is for 5,000 transaction, but it's a 5 lakh transaction. And fraudster has also changed the beneficiary details. Other type of frauds, what we see are bank frauds, wherein they target the asset products. So asset products is all kind of loans. Liability products is all type of accounts, be it a saving account or a current account or maybe a fixed deposit which customer has taken, and they do the premature withdrawal on fixed deposit and divert the funds to a account controlled by them. Another fraud category is on prepaid cards. So organizations think that prepaid card there is no risk, but fraudsters using technology they can make the prepaid cards limitless. So they buy a prepaid card for 5,000 rupees, but they make it limitless. That means when they do transaction, there is no limit applied. A big fraud happened involving some Indian banks earlier, wherein these prepaid cards were used outside India to take money out. You may have heard of even ATM cards dispensing money more than what is there in the account. So these are some of the fraud types using technology which fraudsters commit. Then there are insurance fraud. So insurance fraud is they take policies in the name of people, and then those people are killed and claim is lodged for the life, or they themselves burn the goods and then they file a fire claim. E-commerce fraud is they order goods, but then after using they return it back. So there is wedding season, people order expensive garments, use it for the wedding, and then they return it within a free lookup period. Or they order expensive product, and then when they return, they replace it with cheap products. There are telecom frauds wherein they run a parallel EPBX exchange to do high value calls, and telecom companies realize it after the fraud has occurred. Or they take SIM in the name of other people and then they use those SIMs to commit fraud. And when police or courts they ask for details, it comes out that SIMs were taken with fraudulent or stolen identities. Retail frauds are there in terms of theft from stores or ordering high value goods and returning low value goods back. There are internal frauds in terms of hiring. I am a HR executive. I set up a company in the name of my relative, and whatever hiring I do only from that company, and that company gets incentive from the my employer. There are internal frauds related to incentives. So organizations offer a tier-based incentive that more business you do, more incentive you get. So what people do, they book a bare minimum business in their name, and after that they pool all business in the name of two or three people so that they can hit the highest level of incentive. And then incentive is shared amongst all the people. There are internal frauds related to bribery and corruption. It happens in procurement, it happens in IT, it happens in HR, it can happen in any area where they are giving out contracts. Misappropriation of organization funds or theft of organization assets or funds. Then there are capital market frauds. So front running is a scheme wherein I work in a brokerage firm in stock market, and I know what kind of orders customers are placing. So there are certain customers who always make profit or large institutional investors. So I can place a similar order before the customer places a order, because I know when customer places the order, the stock market pricing would get affected. So I place a opposite order before I place customer's order. Or sometimes I simply mirror what customer is placing and I also place that same order in my personal account. And as I mentioned earlier, where there is money and humans involved, frauds can occur. Now, what is the regulatory landscape in terms of frauds in India? So, if we look at it, there is Reserve Bank of India, there is Insurance Regulatory Authority in India, there are SEBI regulations which apply to all the listed companies. In India, we also have a National Cybercrime Reporting Portal. In Maharashtra specifically, they have set up a Maharashtra specific cybercrime portal Likewise, some other states are also in the process of setting up state-specific cybercrime portals. There is a central number through which customers can complain about fraud. If we look at global framework, so in Singapore, the regulator is coming up with a shared responsibility framework. Basically, what it means is that it is not just the responsibility of banks or telecom operators, but also the digital platforms, likes of say Google, likes of say Facebook, who has to you know, take action to protect customers against scams and frauds. In UK, there is a recently introduced law which mandates the banks to return to customers equivalent of GBP 85,000, even if customers lose money due to their own compromise. So the type of fraudulent payments I was talking about earlier, even if a customer has done such a payment, bank has to reimburse the customer for that amount. And in Australia, there is a consultation paper similar to Singapore, where they are involving digital platforms as well for being responsible for frauds. Now, when we talk about fraud specifically, so fraud is defined as any intentional act that aims to obtain a unlawful benefit or cause loss to another party. So what we mean by this is that fraud need not always be financial. Sometimes it may cause non-financial loss also. And fraud is not always for the benefit. Sometimes it is done to cause loss to another party. Now, when we talk about fraud framework, there are primarily four key elements in counter fraud framework. The first one is prevention. So you try to prevent as much fraud as possible. And there are a lot of prevention tools. You do fraud awareness exercises, you conduct fraud risk assessment, you also review any new policy, any new product before they go out in market to identify if there are any gaps and prevent any loopholes so that frauds do not occur. While you do prevention, you also need to have detection processes in place, because many a times new modus operandi or new techniques would be used to commit fraud, which you may not have thought of. So you have detection controls, which helps you in early detection of fraud. And response primarily involves investigation, because when something goes wrong, you need to investigate to identify how the fraud occurred, what was the modus operandi, who all were involved in fraud, what are the learnings which we can apply so that we are able to stop frauds from reoccurring in future. And lastly, you need to have governance of the counter fraud program. So, like people say, who will guard the guards? So when people who are working in counter fraud, if they do something wrong, how will you catch that? So that's why you have governance around a counter fraud program, so that everything is documented, everything is reviewed, and there are reports available for top management to assess whether fraud function is working properly or not. Now, when we talk about counter fraud framework, there are various aspects, as I mentioned earlier. So, there is governance, there is prevention, there is detection. We don't have that much time to go into detail about this, but in case you are thinking of building career in fraud, there are a lot of opportunities around that. And depending on what is your preference, whether you are an extrovert or introvert, you are a techie or a non-techie, depending on that, there are different type of things you can do even within the fraud framework. As ACFE is a premier global body, it's based in US, and this is some statistics based on their latest study. Every year they publish a report to the nation, and they do this based on global survey. So the last one, they covered 1921 cases from 138 countries, and they estimate that every year organizations lose 5% of their revenue to fraud, which is a big amount. Many organizations won't even have 5% profit margin. But based on their survey, around 5% of revenue, not profit, 5% of revenue is lost by organizations every year. Now, this is again some statistics. Again, I'll cite the time constraint and will not go into much detail here. But couple of takeaways from this is corruption is one of the big contributors to fraud, depending on the country. Uh, More than 50% of the frauds had more than one person involved in fraud, and 87% of the fraudsters, they were doing it for the first time. They did not have any prior conviction, or even if they were involved in fraud, they were never charged with fraud. And living beyond means, that is, I'm getting salary of 20,000 per month, but whenever a new iPhone model comes or latest Android phone comes, I use that. I drive a big car. These are some of the examples of living beyond means. So these are some of the red flags that this person may be involved in fraud. In majority of the fraud loss cases, no recoveries were made. So people ask this question, that why people commit fraud, or what is the motive for doing fraud. So we call it as fraud triangle, or sometimes we talk about fraud diamond term as well. So what the fraud triangle says, that usually people commit fraud because of three reasons. One, is they rationalize that everybody is doing this, so I can also do this. Or they say my company is not treating me well, or my manager is not treating me well. So that's why I'm doing this fraud. Sometimes they are under pressure, pressure to meet targets, or financial pressure, or to pressure to maintain a certain lifestyle. It's wedding season, and you would see weddings run into crores of rupees. Now, somebody who's a middle level employee, he is looking around and seeing all my colleagues, all my relatives, they spend so much money in marriages. I also need to do that. Or the wife tells the husband that all our neighbors, they go on foreign visit at least once a year. I also want to do that, but my income doesn't support that, so I am under pressure to meet certain lifestyle, which may point me to commit fraud. I'm not saying this is a genuine reason, but we are analyzing why people commit fraud. And thirdly, opportunity. So frauds happen when people see an opportunity to commit fraud. When we talk about opportunity, it is basically lack of controls. So say I see a 500 rupee note lying somewhere. I look around and I see, if I pick up this note, nobody will catch me. There is no CCTV camera, nobody is looking at me. I'll pocket that money. But if I look around and I see that if I pick up this money, I'll get caught, there's a CCTV or somebody is watching me, I may not commit that fraud. So that is what opportunity is about. Another dimension sometimes people talk about is capability. That I want to steal an aeroplane, but I don't know how to fly that aeroplane. So even if I am under pressure, there is rationalization, there's a opportunity, nobody will see me flying away the aeroplane, but I don't have capability. So they call it fraud diamond. But to me, capability is, combined with opportunity. I cannot make use of opportunity if I don't have capability. So I don't call it fraud diamond. I prefer still calling it fraud triangle, which is three elements: rationalization, pressure, and opportunity. Now, when we talk about fraud risk life cycle, I spoke about this, that you prevent, you detect, and if you detect something, you investigate. Learnings of investigation go back into prevention and detection to prevent repetition, to prevent reoccurrence in future. So fraud, cybercrime, and financial crime. Another area, even if you are working in this sector or you want to work into this sector, so there are a couple of areas which are very closely interlinked. One is fraud, second is cybercrime, third is financial crime. So financial crime involves sanctions, it involves money laundering. Cybercrime involves anything which is done using technology, and fraud is, it could be part of cybercrime, it could be part of financial crime. That's why I'm talking about all of them. So overall, I call it financial crime, which includes money laundering, insider trading, tax evasion, cybercrime, any illegal trade, illegal activities, or fraud and corruption. Cybercrime involves a wide range of criminal activities that are carried out using digital devices or networks. Now, cybercrime involves the use of technology to commit fraud, ID theft, data breaches. All these things get covered under cybercrime. So what are the opportunities which involve cybercrime area? So one of the key things is cyber security. You want to defend your organization or yourself against cybercrime. How do you do that? You take up a lot of measures which include cyber security related measures. And whether you are working in cyber security or anti-money laundering or counter fraud, you try to collaborate between different areas. It involves in personal life as well as in corporate life. So there is a saying, old saying, some people call it African saying. So it says, if you want to go far, uh, indulge in teamwork. You want to go fast, do it alone. So your choice. So I prefer going far, which means you want to go further in your career, you would always indulge in teamwork. But you want to do something very fast, then maybe you don't get time to indulge in teamwork, then you do it alone. Now, I'll give you example of collaboration in countering fraud. So here, if just stay on that elephant slide, please. Yeah. Uh, so now here, if you are looking at only your area of work, so your area of work tells you it's a rope. Your area of work, you are looking at one leg of the elephant, you will say it's a tree because you are blindfolded. You are not able to see anywhere else. Somebody else will say it's a spear because they are looking at teeth of elephant. Somebody is looking at ears and calls it fan. But if you collaborate with each other, you will be able to identify it's a whole elephant because you are not looking at parts, you are looking at whole. So that's what collaboration means. So I'll stop here. Just stay on this fraud prevention NPAP. So NPAP means new product approval process. So whenever an organization is launching new product or new channel, it's best practice that you review it internally with your counter fraud team so that they can help in identifying what can go wrong here. This is what I was saying, that there are a lot of career options. Maybe you are not meant for conducting fraud investigation, but you have very good mindset and you are very creative. Then in fraud prevention, you can contribute by reviewing new processes, new channel which the organization is going to come out with, and you can help them in identifying vulnerabilities, gaps which people can exploit in market. And then when the process has been reviewed by counter fraud professionals, that means when it gets launched, there are very less opportunities to commit fraud. Okay, let's stop here. So what we mean by fraud risk assessment is basically you review your existing policies and processes to identify what can go wrong here. So you are basically thinking like a fraudster. You involve business teams and you ask them, in your this process, this policy, this product, what are the things which can go wrong? And together you create a list of risk scenarios. What are the different things which can go wrong? How your existing policies and procedures can stop those wrongdoings? And if your existing controls are sufficient to stop those wrongdoings, or you need to add new controls, who would be responsible for implementing those controls, uh, by when those controls will be implemented. So by doing this exercise, you are able to identify scenarios which can be exploited in future. So you are able to identify and mitigate potential risk scenarios. And we'll come to you. You will get sufficient time to ask questions. That's why I'm running through the slides. So just hold on. We'll run the slides and then we'll be able to answer questions. Okay, just stay on this. Now, you would hear this word KYC, that know your customer, but to me, it is KYX. X stands for each and everyone. So organization should know whoever they are dealing with, not just customers, but their staff, their vendors, their investors, because anybody can do a fraud. It is not just your customers who can commit fraud. Your vendors can commit fraud. Your staff can commit fraud. And if you do not do, you are a say fintech startup or any other category of startup, you do not do a background check on your investor, you don't know, maybe criminals are pumping money in your company. So you don't want to be associated with such criminals. So you need to do background check about your investors as well. That's why I'm calling it as KYX.
Yes, sir. We will take
Okay.
questions from chat first.
Okay. So there is one question, that even if we have prevention, I think you mean prevention and detection control in place. Still the market is developing in all the manners in terms of technology. What can we do on the on this situation to control? Because the control checks like RCS and all will happen once a year. I am asking related to banking module. Yeah, excellent question. So see, one thing we recommend to all counter fraud professionals is be aware of what is happening in the industry. While you may do your fraud risk assessment or risk and control self-assessment exercise once a year, but if you identify new modus operandi, new technologies which are used to commit fraud, you can review which areas in your organization can be affected or impacted by that and review that. Don't wait for the full year cycle. Your aim is to protect your organization. Your aim is not to tick box that we have done this annual or half yearly exercise. And another comment is, so I'm not sure whether presentation would be shared. I'll let Sonam answer this. I am okay,
Yeah.
Sonam, if you want to share. Yeah.
Okay, so Mansar, I want to answer this question. Presentation will not be shared, but we will upload this recording on iCyclone's YouTube channel. So you can check our YouTube channel and find this PPT or whole session recording.
Okay, then this topic comes under GRC, yeah, partly. So, Prashant, this topic is under GRC, governance, risk, and compliance. Now I'll go to Q&A. So, crime versus fraud. What do you mean by Murugan? You have written a statement with a question mark. What do you want to know? Is it
Actually,
same? Okay, so Murugan has written, is it same? Crime versus fraud? Yeah. So I would say fraud is, when we talk about fraud, we primarily look at uh, white collar crime or corporate fraud. So corporate fraud is, it is done by insiders. There is external fraud also, but there is certain crime like physical crime. Somebody causes physical hurt to somebody. That is not fraud. So I won't say all crime is fraud, but all fraud is crime. I hope I answered your query, Murugan. Now, Jamil mentioned which are the fraud related certification we can do to get recognized in market. So my response to this, Jamil, is while certification helps one to get notice with the recruiter or get notice within the same organization, but certification does not alone means that the person knows about the topic. So you want to get certification, there are a lot of certifications available from ACFE, there is from ISACA, there is also from ACAMS nowadays, and there are some homegrown certifications like Indian companies offering certification. Problem with the international certification is you pay for the certification once and then you keep on paying annually to maintain the certification. So it has become a kind of business for them. Uh, Big advantage of certification is when you are going out in international market for job, there they value certifications a lot. In India, I haven't seen a lot of value attached to certification. So depending on where you want to go, certifications might help. But whether you take the certification or not, ensure you have the knowledge, because certification is like, I have a certification in English but I cannot speak in English. That certification is useless, and people get caught because there are organizations and these certification mills who take money and give you a certificate, but then in market there is no value of those certificates. Another one from Zone is, how do you mitigate and optimize control for new fraud techniques that machine learning model might not be trained on? In short, do you see increase of false positive in badly tuned models? Certainly, Zone. So one big challenge, I talked about this earlier when I was talking about challenges, is that whatever prevention detection system our organization implements, there is always this problem that you get 100 alerts. Out of those 100 alerts, there may be 4 or 5 confirmed frauds. So how do you tune your rules? So one, I would say best practice is you need to continuously tune your rules, tune your models to see that you get the optimal results. At the same time, when you are implementing a system afresh in any organization, don't cast a very wide net. because sometimes people want to cover every type of fraud using one system, which is impossible. So you start small. You start with maybe 5 or 10 rules, or maybe very limited machine learning models. And with experience, you increase your rules, because you may be tempted to implement 200 rules. And many software providers, they offer you a library of 500 rules, 1000 rules, but you don't know what works, what doesn't work in your organization context. So better implement small number of rules, see the outcome, fine tune them, and then expand same set of rules and models. What is insider trading and how to tackle it? So insider trading happens mostly in stock markets, wherein I am working with a company and I know that this company is going to announce its results and prices will go up. So I am an insider. I tip off somebody and I tell them buy this company's stock, because after 1 week, company will announce its financial results and prices will go up. Or the contrary, I know that company is going to announce losses in this quarter. So I tell my guy that if you have stock, sell it. Or in some markets where short selling is allowed, they indulge into short selling. That is, they don't own the stock, but they agree to sell it at a price in future. And when that future time comes, by then the actual price might be much lower than what was there when the short selling trade was undertaken. So they make profit with that. In India, I don't think short selling is allowed as yet. I hope I answered these questions. Okay, now, so I would recommend everybody to put questions under Q&A. I am taking up some from chat now, but after this, I'll not take from chat because it becomes too much looking at two different options. But if you have any more questions, please type them under Q&A. Meanwhile, I'll answer this last set of questions from chat. So, what should employees do if management wants to hide fraud? So there are multiple ways through which you want to uncover a fraud. You do that, but follow certain processes to ensure no harm comes your way. In India, we don't have very strong whistleblower protection in private sector. It is there for government, but not in private sector. So there are regulators to which wrongdoings can be reported anonymously. Organizations don't like it, but if I am seeing something wrong, I will not hold back. I'll escalate it within the organization. Maybe I'll go to board first and see if they take any action. And even if they don't take action, the last recourse could be going to the regulator or going to the courts. So we had one company, because it's public case, I can talk about it. Randexy, couple of years back, a whistleblower reported to US regulator about them, and whistleblower was rewarded for that whistleblowing, because Randexy was manipulating their test results to pass quality control testing. Another global case was of Volkswagen. Couple of years ago, Volkswagen was fined heavily by regulator because of a whistleblower referral that Volkswagen was installing a device to show lower pollution when their vehicles were being tested by regulatory bodies. So there have been a lot of examples like that.
Sorry to interrupt you, sir. I want to tell you all I have put a feedback form link in the chat box. Kindly fill it out as soon as possible so that we can get your requirement, what type of courses you are looking for. So we will plan and make the course accordingly, and we'll connect with you, and we will start our batch soon.
Thank you. So Pushpen, I think you are from Saudi, if I am not wrong, but let me answer this question. So I have a colleague in Saudi by the name Pushpen Singh Tomar. His question is, while addressing high risk alerts and red flags is crucial, how do seemingly non-suspicious or low risk alerts still pose potential risk to an organization? Could you elaborate on the hidden impact they may have on operation and discuss effective approaches to prevent and manage these risks without compromising efficiency. Yeah. So very valid question, Pushpin. What happens when organizations are getting high volume alerts? Uh, they classify alerts under two, three categories: high risk, medium risk, low risk. And the name itself indicates that initial focus would be on high risk alerts. But that does not mean that you do not do anything with your low risk or medium risk alerts. I always recommend that do a smaller sampling among your low risk alerts and see if you are catching some frauds there. Maybe after your analysis, you may change the risk priority, risk level for certain kind of alerts and move them from low risk to high risk. But you should not make this mistake that it's low risk, so we don't have to review these alerts. It can be very expensive mistake. Any other questions, queries? So, Sonam, up to you. I think we have answered almost everything so far, and it's 6 p.m.
Yes, yes, sir. First of all, thank you so much for such a fruitful session. And I would like to again reiterate about the feedback form. Kindly fill this so that we can get the requirement you are looking for. Accordingly, we will connect with you. So do not forget to fill this form. Okay,
So, yeah, so there is one last question. I'll take this up, Sonam. So, like
okay.
ISMS in ISO 27001, so ACI has announced a standard. I don't remember the name of standard. They have done it in collaboration with ISO organization. So you look up counter fraud investigation standard. It's not the overall fraud management, but it is for investigation. So Association of Corporate Investigator and ISO together they have launched a certification on fraud investigations. Thanks. That's all from my end, Sonu.
Okay, what type of which course, what type of courses you're looking for in risk management? You can write in the form. I have made one of the specific field there. You can put that. You can add your suggestions. Any I have made multiple fields over there that will helpful for you and for us as well to understand our audience and their requirement. So yeah, that's it from my end. And once again, thank you so much for joining us in this session, and we would love to join with you again. Okay, so in case you need any requirement about any of the course like risk management or any course that you want to opt for career development, you can check our website, which is the ISEC Learn, and you will find multiple courses. You will find the helpline numbers over there where you can connect with us, and we will definitely love to assist you. Thank you so much for joining. Have a good day ahead.